All right, what's going on, everyone? If you're new to the channel, my name is Zach. All right, and I love to day trade SPY. Okay, the S&P 500. I do day trade and swing trade other stocks as well, but there really is only one stock you need to trade, and especially as a beginner to really understand and really get yourself an edge in the market. Right, once you do that and create your edge in the market, that's really what's going to elevate your game and take you from an inexperienced, unsuccessful trader to finally taking the right steps to walk down the path of success. All right. So, this is one way you can do it again as a beginner. All right. Thinkorswim has something known as the flexible grid. Okay. So it makes it very easy. And the setup that particular I'm going to be using is I'm going to copy and paste the option contract that I'm going to be trading. Okay. And I'm going to plug that into the top grid here. All right. And copy and paste that into here. And then you'll be actually be able to track the price of your options contract. Right. So you can see here it was around 50 cents. All right, come up to hit highs of 80 cents, 90 cents. Okay. Then the next one I like to look at, okay, is forward slash ES. Now I like to look at the futures on small time frames. Okay. I like to look at the 5 minute chart and I like to chart out my supply and demand zones for the market based on the futures. Okay. So that's what I have in my top or my bottom left screen right here. All right, is the futures, and I have my supply and demand zones charted, right? Supply zones in red, demand zones down here in green. And then I like to, use the Fibonacci's as well, just to give me a little bit better entries and exits. Okay. The other thing I'm going to look at is the SPY. Okay. The S&P 500. I like to keep this on a 1 hour chart. Okay. So, we're using the 5 minute chart for entries. Okay. And scalps and, really watching these levels. And then we're going to look at the 1 hour chart with the person's pivots. That's what these are. And these are, okay. They're person's pivots. It's a study set that you can pull up on Thinkorswim, and it's going to give you daily, weekly, monthly, pivot points for the market, right? So if we look today, right, we had this pivot point here, all right? And if we were going to close, stay above this level, right, there was a high likelihood we are going to come to this level here, our pink level, okay? So that's what we saw happen. And if you look at where the market closed and bottomed out, it was right on top of this level. So tomorrow, right, what I would be looking for is look for a call entry to the upside, okay? If we find support here at this level, or if we come down at this level, right? So it gives me just some pivot points and entry ideas, right? Now, again, I like to use the actual futures over here on the smaller time frames to spot it, but the 1 hour chart will give you a nice sense, right? Like we saw the nice push and open up above today, right? We saw the pullback and the test of the person's pivot right here. Okay. And we saw that we actually found the support we needed and continued to push higher, right? And we closed and pulled back a little bit after hours, but are holding our person's pivot level right there. Okay. Now, the next one I'm going to look at is the VIX, the volatility index, which is based off of the S&P 500 futures contracts and or options contracts. Okay. And then this right here is actually how I actually trade. Okay. So what I do is I come in here and I instantly buy when it hits, when I see a price, right? So if I see it dip below this level here and I want to go long, I can instantly buy on the S&P 500 with a very low spread. Okay, so it makes it super easy for you to get in and get out instantly. Okay, and SPY is going to be what the most liquid. The S&P 500 is the most liquid instrument there is in the stock market. So um, you know, not only are you going to be able to get in and out when you actually want to at the prices you want to, right? But you're also going to be trading something that lots of other people are going to be watching and watching the same levels. And if the market is seeing the same things, right, you're going to see traders step into these trades and make some really nice profits. All right. So I just want to show trading options. If we look at the lows from the highs there, that was a 133% move. Okay. I'm going to break down my trade for today. But before we do that, we'll go into the Options Trading Tycoons Discord. And I just want to show you guys that this is what's going on in the Discord, right? I had some SPY call options right here that we closed for 87%. All right. And if you look today, we had a call out at 1036. Okay. So this is the small cap call outs, meaning that each one of these call outs is typically below $200. Okay. We have a stock call outs tab and a regular call outs tab where most of the option call outs are above $200. So, whether you have a large account, right, and you're looking to throw 10,000, 50,000, $100,000 into a play, or you have a smaller account and you're looking to find option contracts that are $200 or less per contract, this is a way for you to be able to do that, right? We have all of that in the Discord. So if you want to join the Discord, right, and be able to get some of these plays and follow some of our entries and exits, okay, you can look here at 1036 and then at 1219. Okay, I closed half of the position at 43% profits. All right. So really in about almost 2 hours, an hour, 45 minutes, was nearly able to make 50% returns. And this is pretty daily. Okay. This is something that you can actually realistically come in here and do every day once you learn. Okay. And once you look and start to understand what it is you're looking for. All right. So let's go ahead and do that. All right. So again, this is what I was seeing on the 1 hour chart, right? So I'm going to go ahead and maximize this sell for you just so you can see truly what we were looking at. So we saw a very bullish engulfing candle at the open, right? That's what this candlestick pattern is right here. Notice how, the high is up here, right? And we opened right at this level along this candlestick, and it completely engulfed this little candlestick here and went upwards, broke past our level right there. Okay. So that's one thing that I really liked. All right. And then I saw it starting to pull back, right? And so you got to think this is the 9:30 candlestick right here, the 9 a.m. to 10 a.m. candlestick or whatever. Okay. Then you have your 10 a.m. to 11 candlestick. And this is where you saw that I entered into the play around 10:30. Okay. So this was my entry here, and I was looking to hold support here off of this level and ride the momentum upwards to possibly this target level. Okay. Or the other target level that I gave you guys that we were looking at earlier, right over in here. Okay. So I had a few areas that I was looking at on the chart, and we were able to take some profit. And I'm still holding the position. Okay. If you watch my latest market update, it seems like this uptrend is just going to keep going, right? It doesn't matter if we get bad news about the market or the economy, or good news about the market or the economy. The market has just been reacting very positively, even if it's bad earnings. Things are pushing up, right? So you have to ask yourself, who is doing this, right? It's the people that have control of billions of dollars and trillions of dollars. These are market makers, right? So you have to play the levels that they're going to be looking at and react accordingly. All right. So that's just like a game plan. Okay. So, using these person pivots, they're going to help give you good ideas to where to have, an entry. Okay. Or to where to have, possibly a stop loss. Right. So, we entered in right around here on this candlestick. We could have cut the play if it started trading below our person's pivot right here. Right. Or we could have looked to average down below this level. And, if we come down to this level, we could look to average down on our calls. Okay. Or we could cut those calls as soon as we break this level and play puts to the downside and go from level to level, right? That's one really good way that I like to trade. And that's why I took some profits earlier in the day around noon. Okay. So again, this is the 9 a.m., 10 a.m. to 11 a.m. candlestick, 12 to 1 candlestick right here. And I took profit on the play around 12:30 because we come to this level. And I said, don't be greedy, right? We played the market from level to level. Okay, we take profit. And now that I was able to take profit at nearly 50%, I have half of my position, okay, sitting in profit. And if we come back down, I can sell that at break even, okay, or I can put a trailing stop loss on, maybe negative 20%. So if the play drops 20%, I'll get stopped out of the play with my remaining half of my position still 20% in profit. All right. So, I really like to look at the SPY 1 hour just to get a little bit of a better sense of the direction, because these small time frames can be a little bit confusing. Okay. Now, it takes a while to be able to chart up some of your own supply and demand zones. But, basically, I've had these levels here And these are the levels that I've been watching, right? We can see that they've been respecting. Okay, so here was previously our demand zone. All right, so we're hovering in this area until the market finds demand, right? So we're consolidating, moving up and down, things like that until we get that demand. Okay, and so the reason they're called demand zones and supply zones is because these are areas where the market again is going to consolidate, okay, and go up and down until we get the imbalance in the market that shoots it straight up. Okay, so these are areas where the market has proven that there's an imbalance. Now, there will not always be an imbalance in every area. Okay. And it's not always going to make it super valid. Like they're going to, just immediately, start rallying just because we're in a demand zone. Right. So we come up into this area here. This was previously a supply zone. Okay. So it was red, but we were able to consolidate, okay, and push that supply imbalance, that previous supply imbalance from the past, and turn that into a demand imbalance. Okay, we pushed higher, came up here and hit our supply zone up towards the top. Okay, so boom, we have our demand zone. All right, we push up here to the top, get rejected. We come back down into demand where we've previously shown the market has shown demand. Okay, so now we have areas where to buy and sell, right? If you're buying blindly up at these prices here, at 42.40, and you see it come up and then you don't take those profits and you watch it drop all the way back down, you're going to be extremely frustrated. And that's what I mean. You don't have that edge in the market. You're just buying blindly. You're saying, okay, well, we just went up, we just came back. I just bought this dip, came up, but I don't have an edge. I don't know where to sell. I don't know where there's a possible supply imbalance or areas of resistance. So once you know those and you really understand those better, it's going to help elevate your trading game a lot. Okay. So again, we're coming down, we're testing this demand zone. We have some bullish price targets on our Fibonacci's. Okay. That's what these lines are right here. We're able to break past those. And yesterday, the market rallied. Okay. So we had a very, very strong rally, right? We opened up right around here and pushed higher through the rest of the day. All right. Now, over the weekend, the futures did dip a little bit. And this is what I like to call triggering stop losses. Okay. Market makers hunt for liquidity. Okay. So we know that this area is a supply zone, right? Just based off of our last chart data, we know that this is an area where there was a supply imbalance and the market dropped lower. So what we need to do is we need to be prepared for that. And we would want to look to trim our positions as we enter into here, right? So if you ride this momentum up to here, okay, maybe you sell some right here and keep the rest and try to ride the momentum to the top. And then you close your position at the top and look for a new position, right? So that's what we did today, right? So today, we'll zoom in a little bit more so we can see the candlesticks just a little bit clearer for you guys on the actual price action for today. All right. And here's what we had. Okay. This is again what I was talking about where market makers are hunting liquidity. All right. They're trying to stop people out of their positions, right? Have you ever been stopped out of a play as soon as the market opened just for it to rally up higher? Well, market makers did that, right? They saw your order when the, market was up to here, right? And they said, well, how are we going to buy more at a good price, right? They say, oh, well, we have people with stop losses below this level, right? Because again, not every area is going to be an imbalance, right? So previously, this was a supply imbalance, okay? But now, all right, there's a possibility where we could repeat that pattern of turning those supply imbalances into demand and pushing the market higher, right? We've been very, very bullish, very aggressive. This has not been a market where shorting in the supply zones has been profitable, right? What's been better is to wait to see if we consolidate and are able to transform that supply imbalance into a demand imbalance. Okay. So again, what market makers are doing is saying, well, I can get in if I put in a short position here on the futures, right? And drop it low enough, okay, I can get people to stop out of their position. And as soon as they get stopped out, I'll have the buy orders come in. And then, you see very aggressively the market pushes up, okay? And this right here is about 9 to 30. This is our opening candle for the market right here, right? So what we see is that we got a clean break above our VWAP, right? So the VWAP is this purple line here, and then these two are our momentum slash directional EMAs, right? So the way it works is, this is what I mean by looking for an entry on the 5-minute charts, right? So we saw the great big push up. I'm not chasing that, right? I know that this is a possible supply zone. I know that the market is very, very volatile the first 30 minutes of the market. So I don't want to jump into anything just off emotions. I want to actually look for a clean entry, right? Well, look at what we got here. Okay. Let me actually zoom in just a little bit more for you again, so it's more clear, right? But we had a very, very nice double bottom, all right on the VWAP. So we have a bottom, okay, come up, come down, and rally further up, right? That's what we just got in the market today. All right. So that's a simple double bottom term that you can get familiar with. Okay. And what we had was initially we had our, yellow directional momentum EMA cross above the VWAP, right? So that's your first bullish signal that we may have a bullish rally. Your second signal is going to be when the orange EMA crosses above the VWAP. Once you have both of these above and you're trading above the VWAP, with both of these are going to be your key levels, right? Where the market is going to hold, right? So for the rest of the day, pretty much, if you look, we came down and we're test these levels and ride it. Then if we break the yellow EMA, we have the orange EMA as support, right? And we just hold those levels until, later in the day, right? This is actually market close down here, okay? And that is actually when we started to dip and head a little bit lower, in the after hours on the futures, right? So, we got the initial signal, a few ways, right? So, I got that entry in right around 10:30. Okay. And we'll just kind of break down again why. All right. So we looked at the daily chart for the person's pivots and we saw the levels, that we wanted to be holding. All right. I came down and, entering off of VWAP bounce is a nice risk to reward ratio, right? Because if I enter here off of VWAP, okay, off of this line, I can either have a quick stop loss here at this level and cut my play very quickly, all right, or what I can do is I can hold through the bottom of my zone here and have this as a stop loss, or you can dot this out, right, and have this as your stop loss. So if you're entering here right around the VWAP, okay, that's about 42.70. All right. And let's say your stop loss is more aggressive and it's all the way this level down here. That's right at about 42.50. Okay. So you're risking 20 points on this move. Okay. For a possible upside gain of about, what would you call that? About 30 to 35. All right. So, you really want to get your risk reward ratio, together. Okay. Like you want to have the game plan. All right. Because if, like we just explained, if you're coming in here around 42.70 and you have a stop loss at 42.50, but your price target is only up here right around 4,300, that's not too well of a risk to reward ratio, right? You're risking 20 to get about, 30, versus if you come in here, right? And what you can do is you can cut if we break below this level and start trading below. Look at what we did. We had no breaks below. All we had was a wick, 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 wick. What's that telling me is that this is a very strong level, and anytime it dips below, it immediately reverses, right? It immediately comes back up, tries to dip below, immediately comes back up. Okay. And that's here at 10:30, right? And this is right around when we entered the play. Okay. So initially, I think I really entered once I got the actual crossover here. So it was a very nice, and kind of simple day for me, right? We were able to have a nice level of support right here to look for. Okay. We had the nice W pattern or double bottom, whatever you want to call it, and we had the bullish crossover on our directional slash momentum EMAs. So, you know, just by using all of those, now I have an edge in the market and, can really get in and make some juicy gains. All right. Now, the last thing that I look at is the VIX. Okay, this is the volatility index, and this one is super, super important. All right, I really think that this is one of the best ones to really watch and elevate your game. Okay, now it all depends on what type of market we are in, right? And VIX is going to help let you know what type of market we're in. When we are below 20.5, this level here, all right, typically we are in a neutral to leaning bullish market. So that's where I'm going to trade throughout the rest of the day, right? So we can see that VIX was below here, and everybody knows that, on Friday of last week, it was a super, super bullish day, and the market seemed to have gone straight up, right? Well, VIX came up and shot up dramatically from 19 all the way to about 21. And I said, okay, well, I'm not too scared. All right. We're approaching the top of the Bollinger Bands here. That's a common area of resistance for it to push back lower and head towards this middle Bollinger Band. Right. And so, sure enough, that's what happened. And if you look, we closed below that middle Bollinger Band and have been holding that middle Bollinger Band as resistance. So, we're going to look for it to head lower now to the bottom Bollinger Band for a possible bounce as it has done previously when we started trading on the bottom side. Okay. We still do have a nice little gap down to fill to about 19.6 on the VIX. All right. Originally, this gap was much larger. It was about this big. Okay. But obviously, we filled it up to these levels. Now, the gap is still present. Okay. And there's still this area to be filled in the market. And these gaps fill about 90 to 95% of the time. So when I saw that we had three signals on the futures market. Okay. Then I had a signal on the SPY, the actual SPY chart, right? And then I had a signal here on the VIX to go bullish because we broke our support level at 2095. Okay. And I know that we're really close to 20.5. And when we're below 20.5, the market tends to be more bullish and more risk on. Then we had the major, major gap right here for us to fill. Okay. So I had three signals on VIX. I had a signal on SPY, and then I had a signal on /ES, the S&P 500 futures. So, it takes time, but once you get that actual chart experience, right, and that actual chart time, and your eyes get used to seeing these things and how they move, right, and how the candlesticks work, and what the price action is really telling you, and how to read volume. These three things are really going to help you. And, a lot of people make their money this way, right? A lot of people make their bread and butter this way. And the reason being is because, such small moves. Okay. So let's look at it. Let's say we entered in around here and, sold at the top. That is a 0.77% move in the stock. Okay. But again, we'll look at the actual price of our option contract. Okay. And we entered in at 54 cents. So let's try to find that area, that price. Let's say right around here is, yeah, right around 10:45 is when I entered. My entry price was 54 cents. Okay. We can look at those highs, rallied up 76%. At these highs, rallied up 78%, right? I said that I'm currently up about over 40% on the play. Very happy with that, right? I could have taken profits if I was a perfect trader and got now at 80%, but I'm actually more bullish. And I think that this play has more potential, right? But again, what we did and what I did in the Discord was went ahead and took some profits, okay? Because the worst thing you can do is enter some plays, have money in the market, right? Let's say you bought 10 of these contracts, right? That's $500 you just put in. And if you were able to get nearly 50% in 2 hours, you know, that's decent money, right? You just made 200 bucks in 2 hours. There's no reason not to take profit on that unless you think that there's more in the play, right? So as you can see, that's why I closed half, taking profit, don't be greedy. And then I'm swinging the rest through the Fed minutes. All right. Just kind of giving the game plan, and some of the thought process behind the entries. Okay, so that's basically it for today's video. Hopefully, it made sense. Hopefully, you learned some new things, and hopefully, you'll join the Discord. Okay, link is in the description. If you're still struggling with all of these things, we do trainings, okay, in the Discord. There's 4 admin members, 4 admin traders. So you can hit up any of them for, private training, or, feel free to ask as many questions as you want in the Discord. If you use code Zachly, like the channel name ZachlyTrades, you can get a discount on your membership. And we'd love to see you in there. Okay.